At the New Hampshire Insurance Department, we take great pride in the fact that our state is recognized nationally as one of the strongest, most stable, and most competitive insurance markets in the country. And that is not just a statistic. It is something that directly benefits consumers, employers, and communities across our state every single day. Whether it is our low auto and homeowners insurance premiums, which depending on the study that you're looking at, is either the lowest in the nation or in the top 3 lowest in the nation, our broad carrier participation, or our responsiveness to the evolving risks that we all face. New Hampshire continues to punch well above its weight, and we are obviously very, very proud of that. We hear from companies, from consumers, and from our counterparts in other states that New Hampshire is doing things the right way. And the reason, frankly, is simple. We believe in markets. We believe that a competitive marketplace with oversight that is pragmatic and limited, but maintains fidelity to the law and is pragmatic, is the best way to deliver innovation, affordability, and consumer choice, while also ensuring, of course, that companies remain financially sound and, again, accountable. In New Hampshire, we don't regulate for headlines. We regulate for results. Results for consumers, results for our business owners, results for our citizens across the state. And that means creating an environment where insurers can do business, where consumers are protected, and where government acts as a fair, transparent, and responsive partner, and not a barrier or an obstacle. We can see this approach at work in a number of different areas. We have streamlined our process and taken a leadership role in modernizing the regulatory landscape, whether through our work on data analytics, telematics, our proposed home resiliency program, or through practical reforms that make doing business in New Hampshire attractive without compromising standards. Of course, there is still work to be done, but none of this happens in a vacuum. Markets are dynamic. Risks evolve. And we know the challenges are ahead, whether in the form of inflationary pressures, litigation trends, or shifting weather patterns. But with those challenges come great opportunities that should be capitalized on. Opportunities to innovate, and it's no accident that a good portion of the event today focuses in on AI. It is an opportunity for us to collaborate and to reinforce the strength of this industry and the regulatory systems that support it. That's what today is about. It's a chance to share information and ideas, to learn from one another, and to continue building on the strong foundation that we've built together here in the Grand Estate. So again, I want to thank everyone for being here, whether you are in the room or joining us online, and also to thank you for the important role that you play in keeping New Hampshire's insurance market strong, fair, and forward-looking. And so with that said, I'm going to turn the program over to Christian Citarella to give us a bit of a state of the state markets.
My name is Christian Citarella. I'm an associate of the Casualty Actuarial Society and a member of the American Academy of Actuaries. I have been with the New Hampshire Insurance Department for 10 years, and the last 6 of those, I've been in the role of Chief Property and Casualty Actuary. I wanted to share a bit about the state of the New Hampshire property and casualty insurance markets, and I think I can do this in 15 minutes. But before we start, though, all the numbers you will see in this presentation are from carrier annual statements as reported to the NEIC. And also, I don't want to forget, I want to shout out our P&C actuarial analyst, Sean Rosine, who basically put together most of the charts and graphs. Basically, anything in here that is accurate is Sean's doing. Any mistakes are mine. So with that, let's get going. The New Hampshire property and casualty insurance markets are strong. I say markets plural because each line of business really does need to be considered on its own. As we will see in the next few minutes, personal lines behave differently from commercial lines, and property lines behave differently from liability or casualty lines. So up here, I've just want to take a snapshot at just how broad our insurance markets are in New Hampshire. In the Granite State, we have well over 100 writers in the personal lines, writing either personal auto and or homeowners. In the commercial lines, I've listed here what I consider the major commercial lines of business: commercial auto, commercial property. We have over 250 writers in the state. Workers' compensation, commercial multi-peril. We have over 280 writers representing over 100 different groups. Commercial GL, we have upwards of 500 writers. If there is a need in the state for insurance coverage, there are going to be writers for that here. Now let's look at the growth of these markets as presented by written premium over time. When considering all lines of business combined, we see a change in the growth after 2020. COVID had a much more noticeable effect on some of the lines and a milder effect on others, but it is clear after COVID, premiums grew faster. For the 6 years leading into COVID, we see steady growth at about 20%. And since then, though, growth has almost doubled. Here we have what, again, I've described as the major commercial lines. These are the drivers of commercial property and casualty insurance. We can see the years leading into 2020, premium growth was relatively modest in aggregate at under 10%. And what we'll see in a little bit is that there is some canceling out of effects inside the different types of business there that ends up balancing it out. However, after 2020, there is a substantial increase in growth, nearly matching all lines combined. And here we see in personal lines similar observations where we had, relatively, steady growth up into the pandemic year of 2020. But since then, we've seen a more rapid increase. To understand these changes a bit better, let's look at year-over-year changes to written premium. Again, we will consider a before and after 2020 view. Although there is a clear difference before and after COVID, we can see that COVID is not the only thing that affects premium growth. Rate changes due to loss experience and economic forces can and do affect premium, but it is important to understand that changes to exposures as well can have significant effect on the premium. You'll see that in 2017, there was, a relatively large jump in written premium. That was a little bit of an outlier in those years. And for this, it is good to look at types of commercial and personal lines that are similar. Here we have combined commercial property written premium with homeowners written premium. Exposures are replacement costs in these lines of business, and also known as coverage A amount. It is important to recall that replacement value is not the same as sales value or retail value of the property. But there is nevertheless an expected increase in coverage A amount as homeowners improve their home's value. We see a bit more of a jump in recent years. It is a pretty clear reflection of the 2021 and 2022 inflationary economic environment. Rates did increase, but rate change alone does not explain the overall increase in premium. Now, when we look at combined auto lines, this is commercial auto and personal auto, we again see the effects of inflation in recent years. But more stark is the drop-off in premium during the pandemic year of 2020. As you might recall, in the second quarter of that year, there were very few cars on the road. Carriers returned premium and cut rates for a short period of time. By 2022, we were seeing rates and premium returning to trends prior to COVID. For both property and auto, year over year is somewhat consistent, and large swings, as we see in 2020 and 2023, can be explained relatively easily. Liability coverage, on the other hand, is more volatile. There are many, many factors that affect these markets. And again, I say markets here. We have included in traditional general liability, we've also included professional liability and products liability here. Loss experience can be affected by large claim settlements, the legal environment, any major tort changes that come up. And then rate changes are necessary going forward. But two, New Hampshire businesses can benefit from favorable economic environments. And then there's workers' compensation. This line has seen loss cost reductions, which are put out by the National Council on Compensation Insurers, which kind of sets the standard, the base, the pure premium that on which all rates and premium are determined. And this value, this loss cost, we've seen reductions in each of the last 12 years. And in most cases, that's going to lead to a decrease in premium unless there are other factors involved. And we do expect and we anticipate increases in premium when there are increases in wages and or job growth. And that was the case coming out of COVID. So what's the state of play? In New Hampshire, we have a strong competitive markets with many writers and an active, responsible consumer environment. As the commissioner was mentioning, we have very low premiums relative to the other states nationwide. We do happen to be neighboring to other states that also have very, very good environments and very, very low premiums. And so it is difficult sometimes when we're number 2 or 3 to Maine or Vermont, but there's not a lot we can do about that, I suppose. But also we have very profitable business environment, very profitable insurance business environment. And that's what I want to get to in the next few slides. And we will look at P&C insurance profitability in New Hampshire relative to our region and the nation as a whole. And we will do that by using estimated aggregate combined ratio. The next set of slides will get a bit busy. And so for this first line of business, homeowners, I'm going to take it slow and walk through it. Combined ratio is calculated by adding losses and loss adjustment expenses with other expenses. Overhead, marketing costs, producer commissions, taxes, licenses, and fees, anything that the insurance company basically pays out. We take that sum and divide by earned premium. Whatever earned premium is left over is considered underwriting profit. It is important to acknowledge that this does not account for a carrier's investment income. This is meant as a measure of the strict profitability of the insurance product itself at the time of sale, so to speak. 100% in this metric, 100% would be a break-even point. Greater than that is a loss experienced by the carrier. And less than 100% would be a profit or an economic underwriting gain for the carrier. We see here in blue the aggregated New Hampshire homeowners combined ratio for each of the last 10 years. And what I'm going to do is label both the actual value for the 2024, which is the most recent data that we have, calendar year 2024, but then also the highest prior year that we have. So in this case, it was 2015 at just over 100%. So next, in orange, we add in comparative values of the same metric for the New England region. Notice that in 2015, we experienced a difficult year for carriers writing homeowners insurance. Winter storms in the early part of the year led to ice dams on roofs and limb damage in homes. There were also power outages, and I thank Doug Reese for remembering that. I was sending in an email to the folks. I was like, what happened in 2015? And so, that was a bad year for winter storms in New England. And New Hampshire wasn't alone in that. As you can see, New England as a region had a pretty significant underwriting loss that year. But since then, though, homeowners has been consistently profitable in our part of the country. And we have been a particularly good part of the country over the last decade. As you can see here now in green, we see that the countrywide homeowners market did see several years of underwriting loss in aggregate since our particular bad year a decade ago. A combined ratio under 80%, as what both New Hampshire and New England experienced in 2024, does suggest welcome rate changes in the near future, at least in this part of the country. You'll see the other peaks of 2017, 2018 nationwide do line up well with natural disasters. We're talking fires out west. We're talking tropical storms down south. We're talking floods, these sorts of things. So we will look at the same metric for a few other lines. As we go through this, the columns will remain the same. Blue is for New Hampshire, orange, New England, and green for countrywide data. Personal auto is consistently and reliably profitable market. We did see a bit of a hiccup in 2022, but the market has returned to form quickly. This is a positive sign that rates may moderate in the near future. So that 2022 appears to have been that bad year for not just, all three areas, which isn't the case when we look at some commercial lines. You'll see here. So I picked commercial multi-peril as a representative of commercial lines in general. And here you can see a bit more volatility in combined ratios. And that's due to changing of loss experience and the variability of the products themselves and the exposures. Nevertheless, New Hampshire consistently outperforms the country as a whole, showing our state is a desirable place for carriers to write business. And finally, we include workers' compensation as the gold standard of stability and profitability. It was not always this way. Certainly not. If you go back to the 90s and early 2000s, no one wanted to write workers' comp. It was a disaster. But improvements in risk mitigation and changes in attitudes towards workplace injuries have contributed to lower claims frequencies and faster recovery times for injured workers. And so despite premium decreases, remember earlier, we actually we're seeing less written premium in workers' comp, despite collecting less premium, insurance carriers continue to see excellent underwriting profits. So this is a very positive sign. So looking forward, New Hampshire insurance markets are strong, they're competitive, and they're profitable. Rate change volatility is beginning to ease. Personal auto and homeowners rates are beginning to stabilize. I handle all the rate filings that come in, review them with Sean. And 24 months ago, we were regularly seeing high teens and low 20% rate change on auto, and we were seeing them 6-8 months apart. Now we're getting back into kind of what I would consider normal. We're getting back towards normal rate requests from carriers. Single-digit increases spread out at least 12 months to 18 months between rate changes. And we're also starting to see it kind of a back to normal sort of innovation and approaches to rate making. There's a greater use and an extensive use of various kinds of creative predictive analytics that are going into rate making, which sort of took a bit of a hiatus during the pandemic years. They kind of rested back in more traditional rate making techniques. And so now we're seeing more of that complex predictive analytics and pricing. Also, we're seeing carriers continue to innovate not just in rate making techniques, but also in the products that they're selling. We have some newish products that continue to develop in the Granite State, two of which, pet insurance is one, and then of course the other is cyber insurance, which brings us to our next speaker. I thank you for your time and attention. We are going to have some time later for questions, and I'll be happy to do that. But at this point, I would like to introduce Emma Werth, who is the VP of Underwriting and Reinsurance at Cowbell. She has worked for MGAs as well as traditional carriers with experience in SME and large national account markets. While she has underwritten P&C, most of Emma's underwriting career has been handling cyber and other related E&O or professional lines. Emma holds an MBA and RPLU designation. She is an active member in both the PLUS and APIW organizations. Welcome, Emma.
Thank you so much for having me. I'm going to educate you all a little bit more on cyber. It is not a new product, but it is new to many people. So it's been around for a while. over a decade, but Munich Re has projected this to be about a $30 billion gross written premium by 2030. At the end of 2024, it was over $10 billion. So it is expected to, get out of the emerging stage and continue to rapidly grow. And while it's rapidly growing, it is still very underrepresented for small and middle market enterprises. And it's underrepresented, but these are significant losses that these companies see. So the average loss is over 200,000, and the average downtime is over 20 days. So it's not just a financial impact. This is a significant impact on their everyday business as well. This can take a business easily out of operation, temporarily or completely. So these are very significant losses. And then even for an individual. So, this can be identity theft. This can be just mental anguish. A lot of the losses that you would see as a company, you could certainly see as an individual. So I want to go into a little bit of kind of the everyday. So first and third party, like a lot of other P&C products, it is financial protection from a cyber incident. So this has been broken out of a lot of other P&C products. They were silent for a while, and now it's often excluded in your both professional lines as well as your property and casualty products. So this has been built to specifically be catered to a cyber incident. And this is a look at what a lot of the coverages are. I will admit, and we'll get into it a little bit later, but they have a lot of different names. So a lot of different carriers call these different things, but this is the meat and potatoes of what is covered. So first party, you're getting your cybercrime, which has a lot of variance in what that covers. Business interruption, ransom payment, data restoration, as well as hardware restoration, reputational harm, and then your forensics, your breach notification, and then your third party. So that's going to be your lawsuits, your regulatory fines, and all that. So some definitions as well. Ransom payments is pretty self-explanatory, but that is your reimbursement for those ransom payments. Your PCI fines and penalties. PCI is the payment card industry. They are a specific regulatory body for, credit cards. So what we find is that if there's a loss where you're a maybe financial institution or retail, like there was a big Target loss about a decade ago, they can come up against losses and fines due to that. It can even be a lawsuit. So a lot of fees with that will get covered by this coverage, as well as with some carriers. It will also include the recertification with this entity, as well as chargebacks and the reissuance of the credit cards themselves. And then you have the restoration of data. So if your data is compromised, the whole getting that data back up and running or replacing it. And then the forensics, some of the forensics behind that of understanding kind of what happened there, if it can be replaced. And I'll skip to social engineering. So this is a piece of cybercrime that I talked about before with the first party. Social engineering is specifically when a insured is misled or deceived into transferring money to a bad actor. But there are other cybercrime coverage as well: invoice manipulation, reverse social engineering, which is with a client or third party, funds transfer. There's a handful out there. Sometimes they're all lumped into one as cybercrime. Sometimes you'll see them broken out all with different sublimits. And then public relations and breach response, I'll kind of lump into one. Sometimes you will see these grouped into one. Sometimes you'll see them broken out. Public relations is specifically around handling crisis management for that entity, so for the policyholder. So they'll help with their reputation, but also really handling how to manage that experience of going through that loss. Breach response will go through the notification, credit monitoring, forensic investigation. They really quarterback the whole loss experience. So the first thing a insured will handle is breach counsel, and they will then kind of notify the other pieces, the other vendors in the loss, as well as the insurance. So they kind of really handle almost the whole loss. So it's a pretty critical piece. And then in the personal side, executives were really the first to get access to personal cyber. Was a bit of a throw-in, I will say, for certain carriers. So they would offer it to the executives in a commercial policy. So it would be a little sub-limit for whatever that control group was. So your CEO, CFO, et cetera. They would have about maybe $250,000 in coverage. And they would have these coverages. So that was really the initial piece, and it was very limited carriers that would offer it. You are seeing today where there is actual coverage for anyone. We could all go buy a policy today. I would say it's still very limited, so this is a newer product on the market. And these are not your personal insurance carriers that are providing it. They are cyber carriers that are providing it. So they are your MGAs and your carriers for cyber that are providing your personal policies. A lot of the coverage is very similar to what a commercial policy handles, just more tailored to the individual. However, there are a few that are specific to individuals, cyberbullying being one, legal review being another. So that's just an analysis of the impact for you as a person. And then the identity monitoring, that's going to be just more tailored to you as a person. It might have credit freezing, things like that. Then I wanted to do some myth busting. So since this is such a underrepresented product for small middle market enterprises, this is a big one we hear, that small companies don't think that they're actually a target. They maybe don't get the press that a Capital One or a Target or a Harrods in London gets. But 43% of attacks are small middle market enterprises. So they may not have the deep pockets to where they're the big lawsuits, they're the big, loss that way. But it's a vast approach that threat actors will take. So instead of one big attack, they'll put out, 50,000 notes out to all these different kinds of entities and different industries, and they'll hit maybe 250 manufacturers and retailers of smaller sizes. They don't typically have the sophisticated of systems, and so they're much easier to actually compromise. They can get a bit more out of them than they actually would a larger insured, because those larger insureds typically have kind of a stronger framework. That insurers don't pay out cyber claims. So, point of pride or not of our paying out $100 million in claims, it is the product that you sell in insurance. You are paying claims. So the big piece with cyber is understanding what you're buying, understanding the coverage that is provided. So with it being a new product, and especially in small middle market, having the conversation policyholder to agent, policyholder to carrier, everyone being in that room and in that conversation to understand the product that is being purchased and the services available is really critical. And that cyber alone is enough to prevent an attack. So I think this is a big one that we're up against every day, especially with a claim, is it's kind of the set it and forget it. Cyber insurance is one piece of the cybersecurity hygiene that every company should have. So it's an ongoing process. So yes, it's an insurance product, so you purchase it and then you handle it at renewal, but it is dynamic. It is available with services throughout the policy period. So you should be working on that hygiene throughout the year, and that's going to impact your policy. And then what to look for in a policy, and this is both individual and commercial, is that clarity and coverage. So understanding what you're buying, having that ease of process, working with someone that makes it easy for you, and being able to customize that for your industry or for you as an individual, making sure you're getting what's relevant to you, and that the bottom two are available. So typically when you buy a cyber policy, you'll get some sort of cyber risk assessment. So there's some sort of scan that's going to happen in the process. And that scan is going to provide a various amount of data for you in what that cybersecurity posture looks like. So having that available and having someone available to discuss that with you is really critical. And then with that, the value-added services. So this is a big piece of buying a cyber product, is understanding those services that are available. They are available with every cyber product. So knowing what you can have, what's free, what's, available at purchase at what point in the process is really important. This is a look at the top threats or losses for cyber. So really your top three are extortion or ransomware, data breaches, and then it's said here as fraud, but those are all various types of cybercrime. So depending on your industry and your revenue size is going to depend which one is really the largest, but they all impact all industries, all revenue sizes pretty significantly. Now, the third-party system failure, that's going to be into the CrowdStrike realm, the Change Healthcare, those kinds of big ones we see. They can be large pops, but in the large scheme of things, they're not a significant part of what we see. And then if I'm looking at something as an underwriter, these are kind of the three buckets of how I'm going to assess an account. So certainly the demographic information, right? Your revenue size, record count. So that gets into the privacy, understanding what kind of data you're holding, how long you've been around, so you're established. Public domain gets into that assessment that I talked about, that scan. It will scan that public domain. And then the service industry, what vendors you use. So understanding that supply chain exposure has become more and more critical. Your claims history, of course. And then with all of that, I can understand your exposure better and then look at your controls. So from there, I can understand what controls I'm really going to hone in on and what I want to look for. And then the coverage selection is really kind of a two-part piece. So certainly I'm going to have certain coverages where I might sublimit, but also the insured and the agent can have a part in that as well, of saying, I don't really need this coverage, I really need this coverage, and all of that plays a part in pricing. With that said, these are the four key controls across the board that are going to play a part. Now, backup hygiene is pretty broad. So within that, how often you test, how often you back up, where you back it up, all of that can vary depending on how large you are, your industry, that gets into that piece. But these are the four that really determine your cyber hygiene in a cyber underwriting process. And then that risk management is that discussion of those value-added services. And then just to look at those controls and how they really go through the claims process or how that would look in a loss. So your MFA or your multi-factor authentication and your training are going to thwart an actor from getting into the system. So that's where you're looking to stop them from entering. If they enter, which most likely at some point someone will, you then want to prevent the lateral movement. That's actually far more key than the entering, is mitigating the damage once they're in there. And so that's where actually an incident response plan and testing that plan, and then the backup and patching become more key. So you're kind of, for PNC, you're putting those fire doors in place to kind of mitigate that damage further. And when we look at the cyber market today, this is a very competitive market today. During COVID, we hit our first hard market. It was an, element of everyone went home, so you increased your exposure there of more endpoints. But also we hit a peak of ransomware exposure at that time as well. But coming out of COVID, we hit a soft market again, and so we are still in that space today. And so you're seeing, of course, pricing is very favorable for not me, but for insureds. And then you're seeing a lot of coverage differentiation being really critical. So we're seeing different coverage variants out in the market today. So that comes back to understanding the coverage that's on your table when you're purchasing a product being really important. And with that, the quality of the paper and the claims handling becomes really important. So when you're going through that process, really knowing who's in front of you as a carrier is really key. Then, of course, I'm going to talk about Cowbell a little bit. So something that we do to try to ease some of that is we do have available some of our products where you can have a completely automated process. We have direct access to cyber experts, both internally as well as externally through some of our vendors. And we use what we call the closed loop framework, which is through AI and through our company, we have a continual assessment where we have AI assessment of data as well as underwriting claims, and our cybersecurity services are continually assessing risk, both in the market as well as internally with our policyholders, to ensure we're always looking at risks forward thinking. And again, to really look at those gaps in the market, we ensure that we're providing relevant coverages for each insured. So really just providing you with the coverages you need, not necessarily all coverages we can, and with the clear understanding of those coverages. So if you went into our platform, we have definitions of each coverage for an agent. So if they're brand new to cyber, they can fully understand what each coverage is. And then it can be just 5 minutes to quote to issue. And this is part of our AI, is our Cowbell factors. So this is a continuous risk assessment through the policyholder experience, but it also is an underwriting tool. So it has data from both internal policyholders, but also in the market. So it's about 92 million data points of US, and we are in the UK, so UK businesses as well. So it allows us to view a risk both internally as well as externally. So it gives a really holistic view for underwriting of what that risk really looks like. And then we have admitted and non-admitted options, all on a paper, for various revenue sizes to really kind of hit as much of the market as possible. And then, as some of you may know, tech E&O is often paired with cyber as well. A lot of tech companies will purchase their own E&O with cyber, so we have also provided that. This is a specific tailored E&O product that was broken out of miscellaneous, but is often blended with cyber as well. And then a look at our services. These are what we provide, just a variance of our services throughout the life of a policyholder. So you can be just an applicant, or it can be at renewal at any point. We provide a various amount of services. And as well as Cowbell Academy. So this is for agents as well as policyholders. They can understand the market, cyber insurance, as well as their policy at Cowbell to really understand what they're purchasing. And then, of course, you can get appointed. So thank you guys very much.
Thank you. Thank you. Wonderful, Emma. Well, thank you so much. So we're going to transition at this point over to our panel discussion. But as we do that, I just wanted to give a little bit more information, particularly around this event and why we do it. So what prompted this event? So, and I'm speaking, by the way, both in terms of Christian's presentation and Emma's presentation. So for those of you who follow this department on a regular basis, you know that we are legally required on an annual basis to do a public hearing for health insurance premiums. We do that in the fall. We've done it typically in the past over at the UNH Law School. And it's a presentation similar to this. We focus in on the particular dynamics that are playing out in the market that impact health insurance premiums And then we also use that event to focus in on a particular trend. And there's a bit of an irony there in that this department regulates only approximately about 30% of the health insurance market in New Hampshire. And yet there's a law on the books that tells us that we need to do this type of a presentation. Whereas in the P&C world, we have a lot broader and a lot deeper regulatory oversight, and yet we did not have an event of this kind. And so last year we kicked this thing off, again, to mirror a little bit of the work that we previously do. And I had warned everyone, particularly my staff at the time, that it had gone so well that we were going to make this an annual event. And so here we are. The hope of this, of course, the goal is that there'll be a benefit. And the benefit is that we will share with industry and with consumers what we are seeing out there in the market, but also because when consumers come to us with concerns, particularly around their premiums, the first piece of advice that we always give them is to please shop your coverage. We have competitive markets. We have a lot of options out there for you to choose from. And so we felt that an event of this kind would really help to further detail and articulate the opportunities that are out there. It's not just a punchline to tell the consumer to get out there and shop that coverage. We've actually got the data and the facts that back up why that is such a benefit. And so, again, to further kind of mirror the event that we previously hold, we did want to also, of course, highlight one particular trend or issue of importance that we are seeing out there in the market that impact consumers. And with cyber threats, we as a department have written about that and spoken publicly about that in the past. We've talked about its evolution from a coverage that was a bit of a throwaway coverage that was very cheap, very affordable, that a lot of businesses took advantage of, to one that today is really, really critical. Emma hit upon it in her presentation, but when you consider that United Healthcare, which used Change Healthcare, is the largest health insurer in the world and was hit by one of these cyber attacks, and it was quite disruptive, it was quite painful, both for the company and for consumers. When a cyber attack can hit a company of that kind, it really has a significant impact on everybody who is doing business in this market. But of course, we here at the department are particularly focused on its potential impact to the consumer. So we felt that this was a particularly poignant and important topic for us to cover. And with the rise and predominance of AI, it's going to be fascinating to see how that plays into everything that we've discussed today. We're going to run a little ahead of schedule for a change. This is great. So Emma and Christian here are going to subject themselves to my Q&A based off of their presentations, which I appreciate very, very much. Christian, I spoke in my remarks just a second ago about the evolution of this type of coverage. What have you seen in that evolution, particularly as it pertains to affordability?
We're talking cyber.
That's right.
What I have seen is just, I don't know if I want to say an explosion, but it's been a significant change in what types of coverages within cyber is available. And that's kind of one of the reasons that I wanted Emma to come and speak, was that, and I'm going to shout out to our forms review folks as well, that we've been talking over the years, just how there's just been a plethora of different types targeting the various needs of, individual, homeowners, and what kind of coverages are available as endorsements to their homeowners policy, or just sold separately as a personal liability product, but then also to businesses of different sizes and different types. And but yes, so there's been a drastic increase in just the types of coverages that are out there tailoring to the individuals.
So Emma, Christian just spoke a moment ago in his response about the customization of the types of coverages that are out there. And a lot of small businesses that we run into talk about the fact that they think that they're too small, not worthy of being targeted. And then, of course, that proves not to be the case, and they're in a world of pain. Could you speak a little bit about the specific types of attacks that you're seeing in the small business community and what they can do to protect themselves from being vulnerable. You hit upon it in your presentation, but a little bit more in depth, I think, would be a great benefit to those businesses.
Yeah, I think the reality is a lot of the same losses you see for large companies, you see for small. It may just be a different scale. Ransomware is heavy for small businesses. Those threat actors are able to get out kind of an expansive amount of notes. To manufacturing is a big industry that's hit in the small middle market space. So they can put out thousands of notes and they'll hit hundreds of small manufacturers. And those are then really significant business interruption losses. And so for a, 2 million revenue manufacturer, that can take them out completely or take them out, for a while. So, these are big losses, and, they still see data breaches. They see cybercrime losses, just the same as the big companies do. I would say the big difference is they don't really see the lawsuits as much. But yes, very similar losses.
So your answer there dovetailed perfectly into my next question, which is, what are some of the most commonly misunderstood elements of this policy? What is perhaps getting in the way of those small businesses being attentive to what this coverage can provide them in terms of protection?
Yeah, I think it is just that misunderstanding that, they think, oh, it's not going to be me. I don't have the deep pockets. And I think early in the product, we thought deep pockets was going to be what went after. And then when this product was first came to the scene, it was really data breach was the name of the game, and privacy was what we thought. It was kind of that third party loss. And then ransomware came along and we really thought about first party exposure. And now you're seeing both coming back in full force. So that understanding of threat actors are specifically targeting small and middle market businesses. So just being in front of that knowledge, that understanding that whatever you can do with your IT or your risk management is appreciated. It doesn't take having a $50,000, $100,000 budget. It can be small things you can do every day that can make a big difference.
Do you see any particular trend from the countries these types of attacks are emanating from?
Yeah, and that is different, small business versus large. We see a lot from North Korea and Russia. I'm not the cybersecurity threat expert, but that is what we hear. And I do know that is different from the national account space.
We talk a lot about small businesses here in New Hampshire because the backbone of this state's economy is small business. But of course, we have got a lot of large employers here in the state. We care about them as well. And obviously, we want to provide them with the best information that we can too. So appreciate you making that distinction. Christian, how are you seeing all of this play out in terms of the rates that are being fined?
That is still an open question. With kind of the diversity of the products that are out there and like you said, the customization, there are lots of products. One of the things that I don't want to say concerned about, but one of the things I'm still eager to learn more about is how that pricing is, how do I say it, keeps up with the trends of that diversification. And we are seeing, different carriers, approaching it different ways. But that is a thing that is still kind of an open question. It's not uncommon in emerging insurance markets that's the case. You need to have, unfortunately, you need to experience some claims and some losses before you can more appropriately price it going forward. It's a little chicken and egg sort of thing. But one of the things that is useful is that there is a lot of information that is out there. When there are large breaches, they tend to, they are reported on. There are some reports at the federal level that deal with, large exposures and breaches that way. So carriers are still working on that.
Emma, I love the term that you used about hygiene, proper cyber hygiene. And I most liken that to dental hygiene because you can do everything right. You can brush 3 times a day, floss, all of that. But somehow something might still get through and you're back in the dentist chair when you don't want to be. You've touched upon some of the things, though, that you can do to best position yourself to prevent yourself from this type of attack. Could you get a little bit more into that, again, for our employers who may be watching that may be thinking, okay, I've got X, Y, and Z. What more can I do?
Yeah. So I would say there's like just the big 4 that you can do that are, I would say, pretty cost effective. Again, not an IT professional, but cybersecurity training is a big one. And that is pretty vast. So it can be basic and then you can get more involved with that. But having that across your organization as well. That shouldn't be just your, owner that does that, but that should be everyone that is training, and not necessarily once a year. That should be monthly. It doesn't have to be weekly or daily, but, a monthly cyber video or something like that. Ideally something that has a test or something, but again, you can start basic and then get more complex. MFA is another, but understanding your network is really important there of where the entrance can happen, where your critical data is, and making sure that's protected by MFA. And if you're backing up your data, making sure that's protected, and that you're testing that backup and then patching. So whatever critical systems you use, you're patching those as often as those updates are available. That goes for us all as individuals as well. That update's available, go ahead and update it.
And I heard you put particular emphasis on ransomware. Does that cover all of the various types of threats that you're seeing as being predominant right now?
Yeah, it really does, because it can come in so many various ways. So the key indicator of loss, it still remains today, always has been business email compromise. And so training and being vigilant is critical there, but that is how ransomware often comes in. It's also where a lot of cybercrime and data breaches come in as well.
So I know that there has been a lot of focus on this issue at both the state and federal level with trying to bring in some different requirements. Obviously, here at the department, we're always trying to strike that balance between protecting consumers, but not overburdening industry with regulations that are going to drive up cost or harm their ability to do business. Is there any particular area, and I'll throw this out to both of you, where you feel that we as state regulators should be looking at potentially new guidelines, potentially new requirements as it pertains to this particular type of threat?
As a regulator, I say yes. And one of those things is just kind of understanding the market better. One of the things in the department, we participate in the National Association of Insurance Commissioners. I work with, my counterparts in other states. And one of the things that we are working on the NIC level is figuring out a best approach to carving out cyber liability insurance metrics from what happens is it gets bucketed in several different lines of business, and the carriers aren't consistent. NAIC folks are not always consistent in collecting that data. And so one of the things we're working on at the NAIC level is pulling that out and making it a separate line for annual statement purposes. So we'll be able to measure and track losses and premium inside this piece business separate.
I hate to put you on the spot, Em. I know that was a regulator-centric question, but from your perspective, what could we be doing that from, your spot in this whole conversation could better position you to protect those entities?
Yeah, I think there is some requirements that could be in place, especially for companies that are like critical infrastructure as well as heavy in supply chain. But understanding should be a sliding scale for size and complexity, which is, I appreciate the challenge.
Certainly. You had mentioned in your presentation that this particular type of coverage definitely was going through a hard market during the pandemic and then probably shortly thereafter. And now we've gone to a place where it's a soft market, much more suitable. It's interesting because there would seemingly be a conflict there in the sense that there's no doubt that the threats are just as predominant, if not more so, over the past couple of years, which one would think would drive up potential costs because when these types of attacks happen, they are, as you mentioned, very, very expensive. What has led to this particular coverage being in a viable option for a lot of businesses of all kinds?
Yeah, so what we saw in that hard market was diligent underwriting that wasn't seen before, where we required a lot of controls that we hadn't prior. So we came out of that hard market with a lot stronger risks that were purchasing cyber. And so you were then able to either stabilize or then kind of bring down pricing for a lot more favorable risks.
Great. So I'm going to ask my last question here, and then I'll open it up to any questions that we have from the folks who have joined us both here in the room and online. So obviously we've talked, or at least referenced, a little bit of AI. It is a technology that obviously is really becoming more and more prominent. What do you foresee as being the things that maybe challenges, opportunities, or at least things that need to be accounted for as AI becomes more prominent as it pertains to this type of coverage? And maybe
I'll say from an underwriting perspective, I immediately go to regulation and compliance, so wrongful collection, pieces like that. So being able to opt in, being able to understand as a consumer when it's being used, and as a company putting that out there, making sure consumers are aware, and being able to underwrite to that is going to be critical.
Yeah, I think that underwriting piece is exactly right. Is going to be really to adjust for that as everything changes and these new opportunities emerge. Rishi, any thoughts on that?
As a regulator, our eyes are on insurance carriers and how they're using AI and machine learning in all areas of it. I mean, we understand that they are currently using it in things like fraud detection processes, in claims, and not necessarily in the cyber world, but in all lines of business, in auto, in commercial lines, in setting reserves, in certainly in marketing areas. And so, again, working with our partners across the country at the NAIC level, we have several different committees and task forces that are kind of trying to figure out best approaches to sort of regulation of the AI ML world.
One of the things I know we've been having a lot of discussion around at the NAIC level is just the flow of communication when an attack of this kind happens, so that the appropriate individuals can be notified, the appropriate steps can be taken. And I know that that's work that's ongoing. Yep. Christian and others are smack dab in the middle of it. So
is Josh here? Is Josh?
Josh is not here, but he's turned into my point man, whether he wanted to or not.
Enforcement counsel. That's right.
So I'll say, just as folks are thinking about what questions they may want to ask, I know I'm supposed to moderate this, but I'll offer just a tiny bit of color commentary. From a regulatory standpoint, one of the things that we're really trying to emphasize to industry is that, when you have these arrangements, and I don't mean to pick on them, but it was a quite prominent example, when you have a UHC change healthcare type of event, it's fascinating that when the relationship first is established, the parties will say, this is going to be phenomenal, this is going to be great, we're going to be able to do so many things better and to the benefit of the consumer as a result of this relationship. And then the subcontractor gets hit with one of these types of attacks, and then the worst case of amnesia you've ever seen sets in, and suddenly UHC doesn't know who Change Healthcare is. They're a completely separate entity. We have no responsibility over them, minimal oversight beyond our contractual obligations, on and on. And one of the messages that we've tried to send to industry is, no, you cannot do that. You are responsible ultimately for those individuals that you partner with, that you contract with. And so you had better make sure that they're taking the appropriate steps to maintain that appropriate cyber hygiene, because if an attack of that kind happens, you're going to be right there on the hot seat, as they were when the NAIC met last year at Phoenix. We really put them through the ringer, asked a lot of tough questions. So it's really incumbent upon everybody in this scenario to make sure that they're doing their part to guard against these types of attacks, again, to ultimately ensure that we're protecting the consumer. Any questions here in the room? Keith, I knew you had to bail me out. No.
No, thank you very much. I appreciate it. I actually have several questions. I want to frame one of them first, and it's for both Christian and Emma, which is the affordability of this type of insurance. And in my mind, it goes to, and this is part of the question, does it start off with a policy limit, and then the underwriters looking at what's the vulnerability, how weak are the systems, how weak are the internal controls, and then that's further, maybe the premiums then reduced by what mitigation efforts that the business is taking place. So kind of from start to bottom, what's the affordability of the product, and what are the drivers relative to what that premium could be? And maybe the last part of that you can touch upon, as a general rule, is the premium a percentage of what that limit might be, but how does that all come together?
Yeah, so a big part of that pricing is the industry, and potentially based on that industry, their record count. So we're just really picking on healthcare. So I'll just keep with healthcare. Since it's such a heavy privacy exposure, knowing how many records they're holding is going to have a significant impact on what limit you're willing to put out and the pricing. So if they have a high record count, I'm most likely going to be a little bit more strict on my limit, and I'm going to put a higher price on that. And then, yes, the debits and credits are going to be based on how they're mitigating their exposure with their controls.
So those companies that have those robust training programs and backup in, I think we call it the cyber the hygiene.
Exactly.
Those which have more robust programs will see reduced premiums.
Exactly. Yeah. And I'd say in the small middle market space, I really like seeing them engage as well. So if I have a conversation with a school, or I hear it with a broker that they're going, hey, they know they don't have much today, but they really want to get something in place, and then have a conversation with someone about what the next step is, I'm automatically going to take that into consideration as well, understanding that they're at a certain point today, but they're already engaging to be at another point tomorrow. That's a really big piece. We take cooperation and engagement far more significantly in cyber than I would say in other lines.
Thank you.
Christian?
Yeah, I could just add to that, like something that I've seen in recent filings, that cyber will be attached to a general professional, policy, and the type of business that is being conducted greatly affects the cost of, carriers will just bucket businesses in different categories. And if you're doing just, if you're in you're just doing something in the trades, you're an electrician or you're a contractor or something like this, and you're not really dealing with a lot of personal information, it's going to be a lot less expensive. Like if the only things you're dealing with are maybe credit card transactions, and even in that, many times people don't even use credit cards, they're writing checks, so that's going to be a lot less expensive for those types of entities than it is for a health provider, a health practitioner that has a lot of sensitive information. And then there's all sorts of things in between. So carriers are becoming much more adept at kind of focusing on where the risks are, and then they can price accordingly.
Other questions here in the room?
That's it.
Anything? Yep.
Kind of leads me to my follow-up question, if I could jump right into it, which is, as the commissioner mentioned, the Hampshire economy is really this small business is the backbone of that economy, where you have a lot of mom and pop retailers who may have an online presence, and they're selling access to credit card payments, debit card payments type thing. What is the target? What businesses should be concerned? Is there a number of, hey, if you have more than 100 regular customers or 1,000 regular customers, or if you're collecting credit card data, what businesses, again, think small economy, need to be aware of these types of risks?
I would say, unfortunately, any personal information you're holding. Or if you're using a payment processor, it goes back to having that due diligence of understanding the vendors you're using is important. There isn't necessarily a threshold. It's any. Luckily for if you're only doing 50, you have only 50 to notify versus 50,000. But it's really understanding those relationships, and that becomes critical. There's so many small businesses that go, oh, I have a payment processor, so that's not my problem. But that interaction between that business and the payment processor comes into play in that loss, to the commissioner's point earlier with United Healthcare. So,
as a follow-up for those businesses that may not have financial or credit card transactions, but where there's a lot of consumer interaction, a lot of nonprofits in New Hampshire where there are membership roles and there's interactions with, basically information. Do those types of businesses need to be concerned because they have PHI? I'm sorry, not PHI, personal information, but not
if it's
PHI.
Yeah, if it's public, like it's someone's name, address, that's not an issue. But where some nonprofits get into challenges is if they're doing some healthcare or quasi healthcare, like they'll do some behavioral work or things like that, to where you start filling out some more personal information. That's where we've seen those social organizations and nonprofit organizations get into some hot water.
Okay. So we've got a question from online. Yeah, AJ, go ahead.
From Mariel Sharon, I'd like to circle back to your statement about encouraging consumers to shop their policies. Given the vital role independent agents bring to consumers to offer your personalized, solid service, market access, all with local expertise, do you see a role for your office promoting the use of the independent agent channel?
Sounds like a question from an independent agent. Absolutely. And we encourage that a lot here at the department for consumers, whether they be individuals getting coverage for themselves, their family, or their businesses, to always work with an independent agent. Reason being is because that agent is going to sit down with you, really understand who you are, the factors that are going on in your particular dynamic, your family dynamic, your business's dynamic, and then get to work finding a suite of protections, a suite of coverages that are going to be best for you at the most affordable price. So absolutely, we encourage consumers of all kinds to work with independent agents. So point well taken. Doug, you had a question.
Question for Eva. With the underwriting process, is there an organization or a standard that you look for that a business can say, we met this standard, and then gives, the underwriting aspect of it? So if, there's organizations all out there that set standards, and I don't know what the cybersecurity, is there one that businesses can go to?
Yeah, so a generic that's not easy to be honest, not easy for a lot of small businesses, like the NIST framework is what we kind of go by. But then you can break that down based on your industry and size of kind of what's most critical and what works for your network. But that's kind of what we use as an idea of what should be in place. But for a small business, that's pretty significant. Yeah. So I wouldn't really say that to a small business owner, but that as a kind of idea is what we use in cyber insurance. Yeah.
All right, we've got two questions over here, I think. So 2 questions here. We are over time, but it wouldn't be me if we weren't going a little over time. So it's part of my brand. So we'll go with these 2 questions, and that'll have kind of a concluding question. We'll wrap things up. So we'd like.
It's a question for Emma. Do you have, for maybe it depends on the market segment, like an average timeline of once an incident is reported, how soon you're able to pay out the policy and kind of get the business somewhat back up and running?
Yeah. So the annoying lawyerly response of like, it depends, So ransomware is something where we will always respond to a claim within 24 hours. Ransomware has a 24-hour everyday hotline. So we have to be right on that because there's negotiations going on and all of that like right away. The payment will very much depend, especially with ransomware, because there's OFAC pieces with that of can we even pay the entity, negotiating it down. Maybe it started at $1 million and you get, the professional vendors involved and they can get that down to 200,000 sometimes. So sometimes they can be closed out in a week. Sometimes it can be months, just depending how far into your system they've gotten, how quickly the insured has understood that they're in their system. Maybe the insured has tried to do it themselves for a little bit before they've reported it, and that can get a little bit more complicated. So it varies quite a bit. But if it's a pretty simple one, it can be under a month.
Do you see much fraud with it?
With claims reporting?
Yeah.
A little, not too much though. Compared to other lines I've done, not very much. Yeah.
Thank you. I represent Granite State Infosec Consulting, and we help organizations and individuals with those frameworks that were just mentioned a moment ago. And in some industries, there are certain frameworks and standards mandated. For example, the automotive industry has TSAX as an example. And you mentioned NIST, which has like 2 different flavors, more complex and less depending on public sector, private sector, smaller, larger organization, right? So I kind of would like to actually clarify a little bit further. When you see an organization having already implemented a certain standard, or at least pursuing it, do you recognize that, even though it might not be your flavor of the standard that you're pursuing within your organization or within your mandates? You do recognize pretty much no matter which standard it is, because some industries and regions and states and so on mandate a certain.
Yep, absolutely. Yeah.
Okay.
Yeah.
Like Massachusetts has their own standard, for example, right? That isn't even an industry standard. You would recognize that one.
Yeah. So typically we'll ask kind of a compliance related question, or scans will pull compliance information. And we put that under compliance. And so that's always kind of pulled. Yeah. And then where they are in that process as well is a part of that. So absolutely. Yeah. Okay. That's just kind of our generic way of looking at it, is that NIST framework. But we recognize others as well.
Okay. Thank you.
Incredibly good question. Again, leads me perfectly into my kind of 2-part included question to both of you. Here at the department, we find that the 2 biggest barriers to consumers getting the coverages that they need, one is they don't know about it. We talk a lot about that in terms of flood coverage, for example, but that also the affordability piece is a huge factor. A lot of people think that the type of coverage that they'd really like to have, that they really ought to have, is just not affordable for them. And so there's a lot of education that goes into that. And so it sounds to me as though throughout the course of the conversation today, one of the really important things for consumers to do when they're having the conversation either with you or with an agent or whomever it might be as they're pursuing this coverage is to really get into detail what it is they do, the systems that they have in place, the types of consumers that they're working with, the breadth of their business, that type of thing, so that whoever they're talking with that's trying to help them can best understand the type of coverage that they need and tailor something that's, again, going to be attentive to that need. And then secondly, I think it's going to be important for that consumer to be willing to make adjustments. Even here at the state, for example, it used to be the case that we would get cybersecurity training. We'd get this huge training every January at the beginning of the year. It would be quite comprehensive, and then that would be it until the following January. And the state made the adjustment now where we get the smaller, more targeted trainings each month that everybody's expected to go through and complete. So having flexibility and helping that business owner to understand, yes, we understand that you've got these protections in place, and that's great, but you're going to want to make the following adjustments because of what has changed. Is that kind of the right approach to it from your perspective?
Yeah, absolutely. Yeah. I like to always say cyber is a forward-thinking product. So it's not something you're necessarily looking at the historical and making a decision based on that. The threat is always evolving. So understanding that. And it's a different person you're having in the room filling out that application than probably every other insurance application. So making sure it's the right person having that conversation, not necessarily your CFO or your risk manager.
Christian, any thoughts?
Well, I just went through this month's training this morning, and I just to echo what you said, it's much more effective. You know, I think about my passwords, and I think about passwords and what kind of passwords I use in my personal life because of the training that we're getting here. You know, and just going through and recognizing, you know, you get pop-up ads and your text messages from who knows where and what. And everyone has seen the Easy Pass, right? We see the Easy Pass
From London.
scan, and your car, you know, you've been spotted in, you know, Wyoming going 180 miles an hour. And it's like, well, I haven't, but it's very easy to get pulled into that. But, you know, it becomes just like, you know, self-discipline in recognizing those threats wherever you are. But from a product standpoint, again, what we're seeing from filings that come in, and I'm looking at Luann and Chris that handle the form side of things, but we're seeing a lot more kind of a standard bare bones cyber protection that's being included in lots of other, you know, commercial lines, but also in homeowners policies, and the options to then go a little further with higher limits and stronger protections. But to your point earlier about affordability, carriers are learning to present a product that is affordable, and then they're learning how to adjust it for more needs as they arise. So they're keeping up with the threats. Now, is there a big threat out there that we haven't seen yet? That's always a possibility. But right now, things seem to be moving in the right direction.
Well, whoever was fashioning that particular cyber attack, Christian, does not know you very well. I've seen what you drive. That car doesn't get into it.
My hybrid is doing just
Very good. Well, again, I want to thank everybody for joining us today. This event has been recorded, so folks who are not able to join us at this particular time will be able to see it and benefit from the information that we've shared today. I want to thank all of the members of the New Hampshire Insurance Department team who are here. They all played not only a critical role in today's presentation, but in the work that we do here, not only in this issue, but on all that we do to help protect consumers. So I want to thank all of you as well. We've had yet another good event. So the threat now is super real. We're going to make this an annual event. So we look forward to that next year, and we'll highlight a different issue. And hopefully, Christian, you'll have as much good news to share next year as you will have this year. So with that all being said, thank you all very, very much. Emma, thank you.
Thank you.